Hello investors and future investors, welcome to the channel. For today's video, I'm going to be going over two stocks that has recently been added to the S&P 500, and more importantly, I'm going to show you how to use both these stocks in order to make income by using options. Now, if you're new to options trading or you're trying to use options in order to make some additional income to supplement your already 9 to 5, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, we're going to be discussing two stocks that have recently just been added to the S&P 500. We're going to go over both these stocks individually. We're going to check out some key statistics, and we're going to decide which one is better in order for you to go ahead and trade with options. Now, even if you do have a small account portfolio, I will go ahead and show you some option strategies in the next video, which is going to be tomorrow. We will be doing live trading on one of these stocks. So if you haven't already, now is a good time for you to go ahead and subscribe to the channel. Now, the S&P 500, for most of you guys that know or may not know, is an index which tracks the S&P 500 or the 500 best companies in the US. So pretty much the S&P 500 sets a benchmark for most people to compare their portfolios. Now, recently, there's two stocks that's been added, and the first one I want to get into is going to be none other than Block, and that's going to be XYZ. Okay, so here we are on Block, and to get started, I'm going to go ahead and jump into the advanced feature right now in order for us to go over the chart. Let's go over real quick to the 1-year outlook to see how he's doing. So now that we are on Block, we're going to be looking for what's known as a support and a resistance line. That is going to be our pivot for us to decide what option strategy we want to use on this stock. So we're going to go ahead, we're going to draw a line right here. You can see this line, white line that's moving up and down. We're going to put that right here. Now at this level, this is around the $70 zone. And this is a very strong resistance point. And the reason why it's a resistance point is that the stock, the share price, has a hard time going above it. So you could see it touched here one time. And if you go all the way to your left, you could see it touched it several times. So for Block, the $70 mark represents a very strong resistance. And as of making this video, you can see that it has already broken through that resistance. The reason why it has broken through that resistance is because of being added to the S&P 500. Whenever the stock is added to the S&P 500, the share price is guaranteed to go up. The reason why the share price is guaranteed to go up is because all institutions and hedge funds that use the S&P 500 in their portfolio, they're going to need to buy these new stocks in order for them to keep their portfolio in line with the S&P 500 because they actually track the S&P 500. Now, like I mentioned, it already went past the breakout point. Is this still a good opportunity to get in this stock? Well, that's what we're going to discuss today. We're going to go down just a little bit and we're going to check out the RSI. Now, the RSI on this is around 60. So right now, Block is heading into overbought territory, meaning it's getting a bit expensive. Let's go ahead and we're going to go back now and we're going to check out a few more key statistics and then we're going to jump into the second stock. So as I scroll down, what I want to bring to your attention right here is the 52-week high. The 52-week high right here is $99.26. Let's go ahead and we're going to remember that. We're going to use this 52-week high to compare to the other stock to see if it is actually worth investing in whichever one of these stocks. So now we're going to go down again and we're going to jump over to the most important one under the trading trends, and that's going to be hedge funds. And as you can see, hedge funds already started to buy. They don't really much have a choice. Like I mentioned, if they are using the S&P 500 as a benchmark to track, they need to add whatever stock the S&P 500 adds to it. Now, overall, the analyst says this is a buy. There's a 72% chance says that this is a buy. Now, here is something that's really, really important. The fair value for Block is now at $78. The current share price is at $79.80. So right now, the share price is perfect where it should be. It's at a fair value. Now, We do not buy at fair value. Everything in the stock market, also in life, you need to do some kind of arbitrage, which means you need to get in at a lower price and then get in at a higher price. So that right there is what's going to help us determine what option strategy that we want to use in order for to get into the stock. Now we're going to go ahead and we're going to jump into the second stock that has been added to the S&P 500 before we go ahead and start doing option strategies. Now, that second stock that has been added to the S&P 500 is one of my favorite, and that's going to be TTD or Trade Desk. For those of you guys that are not new to the channel, you guys know I've been trading this stock for more than 5 years now, and I'm actually happy that it actually got added to the S&P 500. Now the share price and the options are going to be a bit more stable. Not good for options premium, but at least it's going to be stable. Now, before we go ahead and jump into the chart, I'm going to go down so I could compare the 52-week high. So right here, you can see the 52-week high on this one is at $141.53, as opposed to the previous one, where it was around $99. So that right there, it's way higher than the previous stock. Now we're going to go down to the trading trends. And as you can see, once again, the trading trends, the hedge funds has already begun buying. This is just the start. They're going to continue buying even more. Okay, so now we're going to go ahead and we're going to see the analyst ratings. And once again, just like the previous one, the analyst ratings is a strong buy for this. Now, the fair value. The fair value for this is at $82. Now, the current share price is around $79. In the pre-market, it's actually at $80. But that does not matter. The point I'm trying to make is that right now, the share price is still below the fair value. So that presents us with an opportunity, and it helps us to make a good decision of what options we're going to be using. So let's go ahead and we're going to jump into the chart. So let's go once again to the Robinhood Advanced feature right here. We're going to go over to the 1 year mark. Good. Now, once again, I'm going to go ahead and draw a trend line on Trade Desk. So I'm going to go right here. You can see this white line I'm moving up and down. The trend line is going to be right here. So the resistance point for Trade Desk is going to be at the $80 level. So currently, Trade Desk is trading right at its resistance point. So now that we determine that the resistance point for Trade Desk is at the $80 level, and we know for a fact that right now the share price is currently below the current fair value. You can see to the top here, $80. Then this gives us an opportunity to make a decision of what option strategy. Now, before we do that, just one more thing. We're going to go all the way to the bottom and we're going to check out the RSI. Now, the RSI on this one is around 54. So pretty much the one thing I really wanted to bring to your attention is that these two stocks are pretty much trading at the exact level when it comes to pricing, when it comes to resistance and support, when it comes to RSI. They're like dead straight together. Now, the difference that separates them is going to be the 52-week high. Trade Desk has it at $141, whereas Block has it as $99. So that might be the deciding factor on what option strategies we're going to use before we get into this. So now we're going to go ahead and we're going to get into the actual option strategies. Remember, we do want to get stocks and options at a reduced price. We do not want to pay market value. So let's go ahead. We're going to start off with Block. I think that's better, since I know way more about Trade Desk, since I've been trading this stock a lot more than I have been Block. Okay, let's go to Trade XYZ options right now. And this is what I would be doing with this stock. We're going to be going to sell. We're going to be going to put. And we're going to be choosing our expiration date. We're going to go to August 15th, and that gives us around 25 days to expiration. Remember, for those of you that have a very small micro account, now is a good time to go ahead and join the channel, like and subscribe. I will be doing a live trade on one of these two stocks tomorrow. So go ahead and subscribe so you could follow me through. I'll also show you an exit strategy whenever I decide to get out of the trade as well. So now we have sell, we have put, and we have our expiration date, 25 days. Now we're going to go ahead and choose our strike price. The strike price I will be going with is going to be the $70 strike price right here. Now, as you can see, these here are blank. They just have not been populated yet. The options value has not been added yet, but that's going to be done by today when the stock market does open. Now, if you were to go ahead and do this option strategy, let's go ahead and click into it, which is known as the cash secured put. Essentially, what you're saying is that I'm willing to buy 100 shares of Block at $70 per share, not $79 per share. And while I'm waiting for the share price to come back down to $70 per share, I don't mind getting $330 while I wait. So that's the option strategy I would be using on block right now. Now, you are getting a $330 premium as soon as you do the option trade. Now, how do you get the 333? You're going to multiply your option premium that you receive, which is $3.30. You're going to go ahead and multiply that by 100. That's going to give you $330. Now, that $330 is going to represent a 4.7% gain. Now, a 4.7% gain is extremely huge. The reason why it's going to be a 4.7% gain, you're going to divide your $330 by the amount of collateral you leave, which is going to be 7,000, your $70 per share multiplied by 100 shares, and that's going to give you 4.7% return. Now, exit strategy. Whenever you decide to do the cash secured put, the cash secured put is what's known as a win-win option strategy. There's no need to go ahead and close out the trade unless you feel like it, unless the stock absolutely tanks, which is not going to happen. It just got added to the S&P 500. However, for my personal portfolio, my personal risk tolerance, I usually like to exit these trades before expiration. My personal exit level is going to be a 75% gain or above. So whenever I have actually materialized or confirmed that my trade is up 75% of this $330, then I will consider strongly getting out of this trade. So let's go ahead. We're going to go ahead and do the other one now, which is going to be the trade desk, and that's TTD once again. And we're going to go ahead and jump right into the options screen right off the bat. Okay, so here we are on TTD once again, and I'll be going to sell. I'm going to be going to put, and I'll be choosing the exact same expiration date, which is going to be August 15th, which gives us 25 days. Once again, I will be selecting my strike price below the current share price. And once again, maybe you have guessed it by now, I'll be going with the exact same strike price, and that's going to be the $70 mark right here. Now, with the $70 mark right here, I'm going to be receiving 2.22, which is $222. This option strategy, once again, is going to be the cash secured put. I am agreeing to buy 100 shares of the trade desk at $70 per share and not $80 per share. And because I'm willing to wait a couple days for the share price to go down, I'm going to be paid for that. The amount I will be paid is going to be $222. Now, the share price may never go down to your $70 mark right here. That's fine. If that happens, then you get to keep your $222, and then maybe you could go ahead and do this exact same strategy for the following month. Now, once again, exit strategy we'll discuss in just a couple seconds. Now, the return on investment. Your return on investment on this particular trade of trade desk is going to be around 3%. And you get that by dividing your 2.22 by 70, or $222 by 7,000, and that's going to give you a 3% return. A 3% return is once again extremely lucrative for a month. Although it's a lot lower than block, it's still a really good, decent return. Now, exit strategy once again. I have been trading trade desk for a very long time, so there's no need for me to go ahead and close this option trade before expiration date. However, I will wait until it gets to like around 85% chance or higher, and then I will consider strongly getting out of this trade. The reason why I'm so sure that that is a very good price range is because I've been trading this stock for so long, and I'm pretty sure that even if the stock does decide to go ahead and go down within this amount of time, it's probably going to go down and not go past the $75 mark. The $75 mark, I have been trading that mark for a very long time, so I know that pivot is right there. It's almost sure. And remember, this is a win-win option strategy. So even if the share price does go past the $70 mark right here, worst case scenario, you're now going to have 100 shares of trade desk that's just been added to the S&P 500 at $70 per share. And then you could go ahead and do another option strategy as the share price goes back up. So there you have it, investors and future investors. The two stocks that I have on my watch list right now that I will be keeping an eye on, and actually I will be trading for the next couple of months, the next couple of weeks, is gonna be Block and also Trade Desk. Both of these stocks have been added to or will be added very soon to the S&P 500, which is going to stabilize the stock and the share price. Now, because of the stability of the stock, it's going to be easy to go ahead and make consistent income with trading. If you so choose to, the option strategy that you should consider using is going to be the cash secured put, which is a win-win option strategy. And the best part about it is that you're agreeing to pay a much lesser price than the current price in order to get the stock in your portfolio. And while you wait for the share price to retract to your chosen strike price, you're going to be paid for that. So win, win, win. So now that you guys have made it to the end of this video, now is a good opportunity, if you haven't already, to go ahead and like the video, subscribe to the channel. But here's the most important thing. By making these videos, I try to put as much free content out there in order for you guys to go ahead and make some income with options trading. So if you guys know anyone struggling to grow a small account portfolio, then the right thing to do is to go ahead and share this video with them. Let's try to help as many as we can make income from options trading in order to supplement their regular 9 to 5. Now, until the next video, keep pushing your investments.